Welcome to the deep dive. If you're tuning in, you're probably trying to get a handle on all this market turbulence lately, and specifically maybe President Trump's very public comments about the Federal Reserve and Jerome Powell.
Yeah, absolutely. We've been looking at a recent piece from the Motley Fool that tries to break this down.
So that's what we're doing today. We're going to unpack that article, figure out what's really going on, and, why it matters for you listening.
Exactly. You see the headlines, maybe you're checking your portfolio a bit more these days. Our goal here is to sort of cut through the noise.
Okay.
We've looked at this article pretty closely to get to the core issue, this tension, this friction between the president and the Fed.
Which is supposed to be independent, right?
That's the whole point, yeah. It's designed to operate without political pressure. But we're seeing Trump push hard for lower interest rates, and there are even reports he's thought about dismissing Powell.
Dismissing the Fed chair. Wow. Okay, so let's dive in. What's the sort of immediate market picture? How does it connect to what Trump's been saying and doing?
Well, you probably felt it or saw it. There was that significant dip just recently, Monday, April 21st, 2025. The big market indicators, the Dow Jones, the S&P 500, the NASDAQ 100, they all took a pretty big hit.
How big are we talking?
Around 3%, roughly, just for that day. And, that wasn't out of nowhere, kind of piled onto some other recent drops.
And the article links this pretty directly to President Trump putting more pressure on Powell at the Fed, right? Pushing him to lower interest rates.
Yeah, that seems to be a main driver, according to the piece. He's been very direct.
Like publicly direct.
Oh, yeah. The article mentions a social media post where Trump warned about a potential economic slowdown if rates didn't fall, right away.
Yeah.
And he called out Powell directly.
Okay, but hang on. A president having opinions about the Fed. That's not totally brand new, is it? People who follow this stuff might remember that.
That's a really good point. It's important context. This isn't happening in a vacuum.
Right.
The article reminds us, even back in his first term, before COVID hit, Trump was often unhappy with the Fed.
With Powell specifically.
With Powell, yeah, and the Fed raising rates back then, even though inflation wasn't a major concern at that point.
Okay, so there's history here. But what makes this time different? Why does it feel like it's causing more anxiety now?
Well, the language is a big part of it. It's really escalated. He's actually openly talked about Powell's termination.
Termination? Seriously? Yeah. But can he even do that legally?
Well, that's the million-dollar question, isn't it?
Yeah.
And the article is pretty clear. Legally, the president's power to just, fire the Fed chair, it's probably non-existent.
Really?
Yeah. Even Congress, under current law, would have a very hard time removing a Fed chair before their term is up.
So it's not just talk anymore? It sounds like there's been some actual looking into whether it's even possible.
That's what's reported, yeah.
Yeah.
That Trump's legal team has supposedly investigated this. And you have to remember, Powell's current term as chair, it goes until May 2026.
Okay, so still a ways off.
Right. And Powell's publicly said he intends to serve out his term, basically saying Trump can't legally remove him.
And Powell hasn't just been sitting quietly either, has he? He's had his own things to say about the economy.
No, he hasn't been quiet. He has. The article mentions, in the past, Powell pointed to Trump's trade war policies as something that could actually keep rates higher.
Because of inflation risks.
Exactly, potential inflation, and that could slow down growth. And more recently, he made a statement saying the Fed is well-positioned to wait for greater clarity before considering any adjustments to our policy stance.
Which sounds like Fed speak for, we're not cutting rates just because you told us to.
That's certainly one way to read it, yeah. It suggests a resistance to that immediate pressure.
Okay, so you've got this very public fight, this talk of potentially removing the head of the central bank. I can see why investors might be feeling a little nervous.
Absolutely. And the article really stresses this, the independence of the Fed. It's like a cornerstone of the whole U.S. financial system.
Why is it so important?
Well, the idea is that monetary policy decisions, things like setting interest rates, should be based on economic data, right? Not on short-term political goals or election cycles.
Makes sense.
So any threat to that independence, real or perceived, it just makes investors worry about stability, about predictability.
And it's not just a general feeling of worry. We're hearing warnings from, actual financial experts, even politicians.
Yeah, the article points this out. Several big names are voicing concerns.
Like who?
Senator Elizabeth Warren warned about a potential stock market crash if Trump tried to fire Powell. You've got Krishna Guha from Evercore ISI predicting a sell-off. Ronan Santa at CNBC said it would hurt global confidence in the U.S.
So serious warnings. And Are we seeing signs in the market itself that this anxiety is, actually taking hold beyond just the experts talking?
Oh, yeah, definitely. That's a critical point the article makes. There are tangible signs.
Okay, like what?
Well, first, that big drop in stocks we talked about on Monday.
Right.
Then there's the U.S. dollar. It's weakened quite a bit, hit its lowest level since the 2022 bear market.
Yeah, okay.
And maybe the most classic sign. People are rushing into so-called safe haven assets. Gold, for instance, hit a record high on Monday.
So, money moving out of risky things like stocks and into perceived safety like gold?
Pretty much. It all boils down to that old saying. The market hates uncertainty.
And this situation is certainly uncertain.
Exactly. Uncertainty breeds volatility. The article mentions the VIX index, too. The CBOE volatility index.
The fear gauge?
That's the one. It's often called that. Now, it's not as high as it was right after Trump's recent tariff announcement.
Okay.
But it's still more than double where it was right after the presidential election last November.
Double? Wow. That's a pretty significant jump in perceived risk then.
It really is.
Yeah.
It shows a definite increase in nervousness out there.
Okay, so we have a clearer picture now of what's driving this and why people are concerned. Let's shift gears a bit. For the person listening right now, trying to figure out what this means for them, what are the key takeaways? How should they think about navigating this?
Yeah, that's the crucial question, right? What do you do? The article offers some perspective here, which I think is helpful.
Okay.
For starters, if you're investing for the long-term retirement, things like that, the general advice is try not to panic sell.
Easier said than done sometimes, but important.
Absolutely.
Yeah.
As long as the reasons you invested in something in the first place still hold true, knee-jerk reactions based on headlines usually don't work out well.
Right. I mean, personally, I haven't sold anything in my retirement accounts just because of this recent volatility. You stick to the plan.
Exactly. That's the idea.
Mm-hmm.
However, the article does suggest maybe being a bit more cautious with new investments right now.
Cautious how?
Particularly with, the really fast-growing companies, maybe more speculative stuff. Given how unique this situation is and the fact that we can probably expect more choppiness in the markets through 2025.
Maybe it's not the time to bet the farm on something super risky.
That seems to be the thinking, yeah. The article also mentions strategies like dollar-cost averaging.
Ah, right. Investing a set amount regularly over time.
Exactly. It's a way to kind of smooth out your purchase price. You don't risk putting all your money in right at a market peak. You gradually build a position.
That makes sense, especially in uncertain times.
The one last thing the article touches on is historical perspective. It notes that pullbacks in the S&P 500 of over 15% from recent highs, kind of like what we saw earlier this year, have, historically speaking, often turned out to be good long-term buying opportunities.
Historically?
Historically, yes. Very important qualifier.
Well.
Past performance is no guarantee, obviously, and the market could definitely fall further from here. It's just context.
Okay, so let's try and wrap this up. If we boil it down, what are the absolute essential points someone listening should take away from this deep dive?
Okay, I'd say the core things are this escalating fight between President Trump and Fed Chair Powell, especially the talk about potentially firing him, is creating a lot of uncertainty. That's point one.
Got it. Uncertainty is key.
Point two. We're seeing that uncertainty reflected in the markets. Stocks down recently, the dollar weaker, money flowing into safe havens like gold.
Right, the market is reacting.
Point three. Remember why this matters. The independence of the Federal Reserve is really fundamental to how investors view the stability of the U.S. financial system.
And challenging that independence makes people nervous.
Exactly. And finally, for investors, short-term volatility is likely to continue. But if you're a long-term investor, try to focus on your goals. Don't panic sell. But maybe be cautious and strategic about putting new money to work right now.
Okay, that's a clear summary. Thanks. So as we leave our listeners to think about all this, maybe a final thought to ponder. Given how much emphasis is placed on the Fed's independence and seeing the market's reaction when that's challenged, maybe think about other times in history, maybe in other countries even, where there's been significant political pressure on a central bank. What happened then? What can those examples tell us, if anything, about potential outcomes down the road? Something to maybe look into further.
That's a great question to chew on. History often has lessons, even if situations aren't exactly the same.
Definitely. Well, thanks for joining us for this deep dive.